There we go. All right. Good stuff. All right. Welcome back, everybody. Welcome to those of you online. For those of you who haven't listened to one of these recorded sessions before, my name is Brian, and this is the session recorded for British Columbia students. This is Fundamentals of Income Tax, our introductory course, and this is part 4 of the course where we talk chapter 4 textbook. Okay, as always, we're going to ease our way into this. Welcome back. Everyone here has just come back from the weekend, and hopefully it is refreshed on all the material is full of good questions. As always, when you join the class, there's a simple checklist of things to keep in mind. This is important to keep in mind because if you get kicked out of the class, you have a computer failure or some other issue like that, it can be easy to forget some of the steps. In particular, that happened to me on Thursday, and it took me about a minute of fumbling around to realize I actually needed to say yes to rejoining the conference. And until I did that, it wouldn't give me any assessment. It didn't give me an obvious visual clue that that was the issue, though. So, in general, let's keep in mind if there is a connection issue, just stay calm. Try the steps here listed on the screen. Well, we did have some issues with the Wi-Fi last time, but hopefully it should be on a different router this time. I can try shifting connections. Look, I can move it back and forth. Just one sec. Don't worry, don't worry. Okay, let's try that. How's sound now? Better? Okay. Yeah, I may need to bounce around from one router to another. Yes, but that's all right. Okay. One of the things of having taught for several years is that you technology stuff, you're it's a little less nerve-wracking the more you do it. Always have a plan B, I say. All right. So that said, those of you listening online, welcome back. We had some technical issues the last couple of times we tried to record the previous class. So the previous class session went up a little bit late as a result. And we didn't get a chance to cleanly review chapter review problems 3-1 and 3-2 last time. So we're going to be going over those problems at the beginning of this session now. For those of you listening online who've already gone over chapter review problems 3-1, 3-2, please feel free to skip ahead in the recording. It should be obvious visually when we move on to the new material. As always, for folks in the class, remember, questions are always good. Please feel free, if anything is unclear, throw in a question. Your life experience, your perspective is very valuable, and the rule I always use is if you have a question, if something the instructor says is unclear, then probably somebody else also has that question and feels a little bit unclear about it. All right. We're going to be respecting class times. In my case, because I have to record for the online audience, if I do need to run a little long, if anyone here in person, if you need to go at 9 o'clock, please feel free. Similarly, I'm always going to be trying to start very close to 6 o'clock, although I may ease into the material a little bit. So if you're running a little bit late, do not worry. That is why we record these sessions, so you don't need to miss any of my sparkling banter. All right, that's it. Let's proceed forward. Now, in the previous class, we talked about we moved further into the tax return. Remember, our methodology in this early part of the course is to familiarize you with the various parts of the T1 income tax and benefit return so that you know how it works mechanically. we're trying to demystify the whole process. So in our previous class, we moved into talking about Part 5A and B of the return, and in particular, we spent some time with Canada Pension Plan contributions and how those are treated on the return, and EI premiums as well, how to calculate both of those payroll deductions and how to handle those amounts on the tax return. When someone has had too much money taken off at source for CPP or EI, we also looked at how to handle that in case of an overpayment or an underpayment. We also looked at some basic tax credits related to employment income. Remember, in this early portion of the course, we are keeping our examples simple by just confining things to things that would be reasonably related to basic vanilla employment income for a single taxpayer with an uncomplicated family situation. As we go further into the course, we're going to build on that, add in more and more types of income, look at different, more complex family situations, and so on. But we're building right now on a foundation of relatively simple examples related to employment. And so the goal is by the end of session 6, you should feel reasonably comfortable completing a basic tax return for someone in a relatively uncomplicated situation. So we looked, with that in mind, we looked at some tax credits last time related to employment. We looked at the Canada employment amount, which everyone in Canada gets for working employment, whether in a formal job or even for casual income. We looked at the emergency volunteer credits, which are some employment-related job credits that are non-refundable, as well as the eligible educator supply tax credit, which is a refundable tax credit specifically aimed at educators. All right. Now, if you guys have any questions about last time, we are going to be looking at chapter review problems 3-1, 3-2. So those questions will also come out in the course of that as well. All right, so let us look at chapter review problem 3-1. And any of you listening online, if you, as I say, if you've already covered this in your own session, feel free to skip ahead. Now, for 3-1, we are looking at the case of Richard Baker. Now, Richard, let's get you down here, there we are. All right, so Richard is filing a tax return for the first time. In February, he started his first job and worked part-time as a clerk for Excel Plumbing Supply. And we can tell from his birthday, right, 2006, so he is just turning 18 in 2024. That has some implications, as we all remember. So he has a T4, but he also has casual labor that he performed for his neighbors, total 500, 300 from John Smith and 200 from Jennifer Jones. He doesn't want to make any additional contributions to the CPP. From an information point of view, he's a Canadian citizen, and he wants to answer yes to Elections Canada question. Bear in mind, remember with Inkling, you can highlight a passage in the text or add a note. So, you know, if you wanted, you can add a note, something like this. Add a note, page 2 of the return, right? Just as a reminder to yourself. So when you are doing these problems at home, you can highlight, mark them up, put in some notes, and you can do that with the main text as well. So even though he's not yet on the register of electors, he owns no foreign property, lives outside of a census metropolitan area, something we'll talk about more today, and he doesn't want to register for CRA online mail at this time. Okay, looking at his T4, we can see the amount of income involved is relatively small. So $4,010 for box 14, $34.51 for CPP, $66.57 for EI. There's no exotic boxes down here, and he's had a little bit of income tax taken off. All right, so let's have a look at his return. So for Richard, looking at it here, so you would have put in his name and address here, 60910 York Drive. You would put in, if you're practicing these, you would put in your city, your province. For most of us, it's going to be BC in this session. Now, the email address here. Now, he should only put in this email address if he is registering for email notifications, right? So if you're filling out this and you forget, you can always pop back and say, does he want to do that? Yes, he plans to register for CRA online mail once he receives his first notice of assessment. He doesn't want to register for it right now. So this then should not be here, right? So we would remove his email address. Now, social insurance number, 805-155-314-2006-0716. Are these seem correct? All right. Actually, you in the chat, you can tell me if you see anything that's incorrect. So as well, if you spot a mistake, feel free to shout it out. So July 16, 2006, 805-155-314. That looks good. Marital status, single. Language of correspondence is English. And province residence is BC. There is no spouse, so this section is blank. And he didn't become or cease to be a resident of Canada, so this section is blank. So we move on to page 2. The elections Canada. So the question here, yes, he has Canadian citizenship. Now, according to the question, there we go. Yeah, so sorry, just had a thought, but it's nothing. All right, so yes to the Canadian citizenship question, no to the elections Canada question. Does that match what we see here? Right, so no, it should be yes to the elections Canada question. So that seems a little odd. Right, so that should then be yes here. Okay. All right, no to the foreign property question, the exempt. He's not First Nations. He doesn't want to register for organ transplant information. There's nothing in the problem indicating that there would be a yes to either of those questions. So those can be left blank, or the answer can be no. All right, now let's look at his step 2 here. So his employment income, line 10100, is $4,010. Does that seem correct, everyone? Good. All right. There we are. And the other employment income here, 10400. So that would be your odd jobs. $500. Does that sound right? Excellent. Okay. So, and there's no other sources of income, right? Nothing we're missing here. Okay. So his total income then is going to be $4,510. So 4510. Now, are there any deductions? Well, going through, we can think about the ones we know about. There's no union dues here, and there's no no company pension plan. Are there any CPP enhanced contributions? We will need to have a look at Schedule 8 to see. Is it given in the question? Sorry, is which given in the question? All right, so this seems to be blank. Now, we can double check on Schedule 8 as to why. All right, if anyone's unclear, don't worry, we are going to look at Schedule 8. Mohammed, you're asking, is it given in the question? Sorry, is which given in the question? Oh, the 500? Yep, it is in the question. So it is. Remember that 500 is 200 plus 300 here. So that's where it comes up. Okay, good. All right. We're just checking to make sure you're paying attention. Okay, so there are no deductions from this income then. There is certainly no repayment of EI or old age security, so the net income is going to be $4,510, same as total income. And there are no deductions from net income, so taxable income will also be $4,510. Now, when we move into Part 5A of the return, so we can see that this $4,510, the tax on that would be $676.50. That's 15% of it. But when we look at his tax credits, you can see the basic personal amount here, $15,705. That's one which is going to apply. But also the credits related to employment. So his EI premium, $66.57, those apply. The Canada employment amount, $14.33. So his total of these lines, $1499.57. That is added to his basic personal amount of $15,705 to give him total tax credits of $17,204.57. Now, tax credits, I like to use the phrase, they cancel out tax. These are non-refundable tax credits. So it doesn't mean if his income is less than this that he will get paid the difference. It simply means that they cancel out his first $2,580.68 of tax. Or another way to think of it, the tax on his first $17,204. Ah, yes, what about base CPP? Yes, what is going on? Let's have a look at his Schedule 8. Okay, so his tax credits then are higher than his tax, so his basic federal tax is $0. Let's jump down to his Schedule 8 and see what's going on here. So Schedule 8, where we look at Canada Pension Plan contributions and overpayment. So Part 1 is what you use for elections. You don't need to worry about that in this case. Part 2 is important, though, right? So remember those charts I showed you last time, and we have a version of the chart here. So he turned 18 in the year. So 5 months of the year then, he was over 18. So this chart becomes important in this case. So he's turning 18, and for 5 months of the year, and again, when is his birthday? His birthday is in July. So in August, he turns 18 in July. So he's only 18 for part of July, in other words. So for August through the rest of the year, he is 18. So this means for 5 months of the year, he's subject to CPP. So for 5 months of the year, in other words, 5/12 of the annual amount. So his maximum pensionable earnings is $28,541.67, and for the additional maximum, $30,500. So he's well under that. But his minimum basic exemption is $1,458.33, right? So that is 5/12 of the $3,500 exemption. So $1,458.33, and that is put down here at the bottom of the page, by the way. So the maximum basic exemption for 2024, $1,458.33. That travels down. We can see he's only had pensionable earnings of $580. His other earnings would have been before he turned 18. That's what that means. So that means, as we run through, so his required contributions, because his income over this amount, subject to CPP, is 0. So his required contributions, down here, required, are also 0. He didn't make enough money after he turned 18 to have to pay CPP contributions, which means that his total contributions up here is $34.51. Those, instead of being claimed on either as a deduction or a credit, the entire amount down here is going to be paid out as a refundable tax credit. So when we have a look back up, and sorry, I'm moving a little quickly just to make sure we don't spend too much time on it, but you can see that refundable $34.51 he paid in CPP is a refundable credit here, and his total income tax deducted $182.14, so that gives him total credits of $216.65. This is deducted from his balance payable, which is 0, so that's a negative number unless he gets a refund of $216.65. All good? Still with me? Good. All right. So the key thing to remember, especially with people with really low income, is that $3,500 exemption. And for people who are only subject to CPP for part of the year, it's really important then to look at the amount on the T4. When we look at the T4, it's really important to look at box 26, okay? Because this shows us, oh, only some of his income was subject to CPP pension. Notice the contrast with EI. With EI, it doesn't matter your age. Every dollar of employment income you have is subject to EI. But Canada CPP has that exemption. And in a case where someone is only liable for CPP for part of the year, then it needs to be prorated. All right. So going back to my windows are stacking in an odd way. All right, so going back to the slides then. So when you were going through the problem, then certain things should have jumped out at you, right? The $500 in casual labor, whenever you see that, or any kind of income amount, you need to think, oh, is this going to be income? Because it's not on the slip. Does this mean it's reportable? Can it be ignored? And if it is reportable, where does it have to go? You know, why is box 26 different than box 14? So you should have put together that he would have been 18 for only part of the year, right? These are things to look for. All right, and then afterwards, once he's done his return, the effect of answering yes to the Elections Canada question, this means he would be put on the list of future electors, so that if the election is called after he turns 19, the Elections Canada people will draw on that list to update the voters list for the election. Now, if he wanted, could he pay CPP contributions on the casual employment, on those odd jobs, on that $500? Could he? Right. Do you remember what form he would use to do that? It starts with a C. CPT 20, right? So there's the CPT 20 and the CPT 30. The way to remember, CP, Canada Pension, and 20 is a lower number than 30. The 20 is the one you're going to tend to use when you're younger. 30 is the one you're going to tend to use when you are older. All right. So if there's any more questions on that, feel free to drop them in the chat, but I'll keep things moving along. Let's have a look at chapter view problem 3-2. Now, again, for 3-2, let's get back here. Edge, there you are. Right, so for 3-2, so this is for Enrico Cruz, and Enrico, his birthday, April 10th, 1973. lives on Elm Avenue in your city. We've got his email, and he is married. I don't think we've had a, did we have a married scenario last time? I'm not sure if we did, but not to worry. This is a fairly basic scenario. All right, so let's look through. Enrico and Leah Cruz have been married since 2020. Leah works part-time. Her net income is $22,250, and she has already filed her tax return. They have no children. All right, Enrico's income is from employment, as well as $1,000 he received working as a volunteer firefighter. He has a certificate from the fire chief stating that he volunteered 230 eligible hours. All right, he is a Canadian citizen, but does not want the CRA to supply information about him to Elections Canada, so we'll need to watch out for that. And he does not want to sign up for online mail. Want to watch out for that. Also, they went on a trip to Las Vegas, they gambled a bit, and won $845 in roulette, which is fairly impressive in roulette, frankly, but they spent it all during their vacation. His T4 slips are reproduced below. Now here, the main complication in this problem is that we're giving you more than one T4 slip to deal with. So when we look at the T4 slip, we can see that there's some RPP contributions we're going to want to keep an eye on. There's also a box 40 amount, box 42 amount, a box 38, and a box 39. So it's important to handle these correctly. The second T4, and in these problems with married couples, pay attention to which T4 is from whom. In this case, Leah has already filed, so she's not giving us a T4. So this is a second T4 from Enrico, a little more straightforward. So we can see there's some employment income, some tax deducted, and some CPP and EI premiums, and then a box 40 amount of $800. Now notice the box 40, usually that's a taxable benefit of some sort. You can see that the box 24 is less than the box 14 by the $800. So whatever this taxable benefit was, it's taxable, it's subject to CPP contributions, but not subject to EI. And then if you look at the box 40 up here for $520, you can see the same pattern. Whatever this taxable benefit is, it kind of doesn't matter what specifically it is, but whatever it is, it's subject to CPP contributions, it's taxable, but it's not subject to EI. Right? And this is relatively common. Okay, so let's have a look at our slides. So let's pull those up down here. There we go. See what questions we want to do. Get back here. Like I said, there we are. All right, so chapter review problem 3-2. So for this one, again, we're going to analyze the problem and determine what information belongs in the return and which does not. As I've said before, but for anyone online hearing this for the first time, it's important to understand what we're trying to do is show you our methodology. When we do taxes for someone, they come in, sit down on my desk, they will give me all kinds of information, some of which is relevant to the tax return, some of which is not, some of which I need to ask astute questions about, some of which I can ignore, but, you know, I kindly listen to them because sometimes it'll lead to something else, and it's important to let people feel heard. So in this case, Enrico has won in Las Vegas, but guys, does he need to report the roulette winnings from Las Vegas? But he doesn't need to report it. It's not considered income, right? Again, if he were a professional gambler, if he were playing in the World Tournament of Poker, or perhaps, I suppose, if he were James Bond or something, you know, needs to play roulette as part of his spy stuff, maybe. But for the average person, it's not their job to play roulette, so it's not considered income. Now, someone in my last class asked a very astute question. Because it's won in the United States, does that have any implications? So it's important to understand that for things like lotteries and gambling, you may be subject to tax in the foreign country. So if you are on vacation in the U.S. and you win the Powerball there, you may have to pay U.S. income tax on it. Just because you're not subject to Canadian income tax doesn't mean it's not considered income in the United States. So So we're only confining ourselves to the Canadian side of things here. So now the information for Leah, where does that go on the tax return? You should already have an idea where that's going to go. And how do we treat the amount in box 87 on his fire department T4? All right, good stuff. Well, let's have a look at the return. I think you've got the right idea. Okay, so let's pull that up. Okay, Enrico should be over here. So for Enrico, his information section relatively straightforward. So for Enrico, he does not want to sign up for email, so this is going to be left blank. His social insurance number and birthday, the answer is normal. His address is going to be your city in British Columbia, as we say, and postal code should begin with a V because it's a British Columbia postal code. Marital status is married. Language of correspondence is English. And province of residence is British Columbia. His spouse's information comes in down here. Now, he should report the net income from line 23600 of her return, whether or not they're claiming credits, because the government will automatically run the calculations for things like the GST credit, things like that. So it's important to put in the spousal information, just so that otherwise the government will ask for this information, because the government wants to pay you your GST rebate if you qualify. So they're going to ask for that information. So Leah's first name goes here, her social insurance number goes here, but notice that is all he is required to put here, right? This does not constitute filing tax for the spouse. In cases where the spouse's income affects a credit, if the CRA has not received the spouse's tax return, they will hold the credit in most cases until they receive that information returned from the spouse. All right, moving further along. So when we total up the T4s, Elections Canada, Canadian citizenship, yes, but no to the voters list question. For the foreign property, there's no foreign property. And again, the First Nations question and the organ transplant question, there's nothing to indicate that either question would be yes. So in this case, when we total up his income, the figure in line 10100 is $59,480. Did you all have that? 1 sec, I'm just going to. All right, I'll give you a second just to answer that. Okay, so all right, so some yes, some no. All right, so what this figure should include is the box 14 income from the first two T-slips. It should also include the honorarium from the third T-slip. So again, that third T-slip, when we look at it, it is box 87, and it's for $1,000. So the $1,000 is going to be included here. So the total of the $1,000 plus the two box 14s will give us $59,480. If the $1,000 was not included here, then the $1,000 would be here on line 10105. Now, in this case, it would be more advantageous to include the $1,000 on line 10100, as we shall see. But to be clear, it is the taxpayer's option. So if they had a compelling reason to do so, they could make it exempt, in which case this figure would be less by $1,000, and we'd have $1,000 in this field here. The commissions, box 42, go here on 10120. That's $3,000. Again, these fields over here are just for information purposes only. So all that does is it tells the CRA that this is a commission sales employee who had commission income, and therefore this employee could claim certain kinds of employment expenses. Employment expenses are beyond the scope of this course, but that's what that is for. All right, there's no other income going on, so the total income, $59,480. We're going to deduct some things. Now, his registered pension plan, that's box 20 on the T4, it's for $2,000. His box 52 is $2,000 as well. So, do you remember, what does it mean when a box 52 is the same as box 20? That's right. It means that the entire $2,000 was the employee's money, right? So box 52 is the total of the employee contribution and the employer contribution. The employee contribution is the employee's own money, which is going directly into a pension plan. So essentially, it is telling the government, do not tax this person on this $2,000. It shouldn't be included in income now. It will be taxed when it comes out of the pension plan. That's the basic mechanic going on here. It is possible, remember, to have a box 52 with an amount that is it is possible to have an amount in box 52 and an amount in box 20 which is 0. That simply means that the employer paid 100% of the premiums. Normally, the ratio of box 52 to box 20 will be 50-50, but it can be higher or lower, again, depending on who is putting in more premiums. All right, in this case, we can tell just by looking at it, there's no employer contribution. The CPP enhanced contributions figure we see down here, $481.52, right? And remember, for enhanced contributions, that's just 1% of the CPP liable income. After we deduct the initial $3,500 exemption. So $2,000 plus $481.52, that's $2,481.52, leaving us with a net income of $56,998.48. There's also the security options deduction. So this is from box 39. So this would be a stock option that was exercised, which means he actually exercised it, actually made the sale, pulled the trigger, and the net benefit that can be claimed here is $150. So that is put in here. Sorry, the benefit, the taxable portion is included in box 14 already, but the deduction here can be claimed, offsets part of the benefit, and that's $150. So in this case, it's taxable income $56,848.48. So again, to look at the tax credits, the $56,848.48 is dropped into the second column because he's just barely in the second tax bracket. So $981.48 is taxed at 20.5% for 201.20, and his first $55,867 is taxed 15% for 83,8005. So his total tax $85,8125. We're not there yet, Elaf. So his taxable income $56,848.48. The raw tax on that income is $85,8125. And again, that moves down the page to line 124. So that comes in up here. So that's the raw tax on his income. Now, but of course, like all Canadian residents, he has tax credits. So his basic personal amount is $15,705 in this case. That carries forward to the top of the next page. His CPP contributions, the non-refundable tax credit portion, the standard portion, $2383.54. And again, that would be 4.95% of his CPP liable income over the exemption. His EI premiums, $948.86. And then, because he's a volunteer firefighter, with the certificate showing more than 200 hours, he is eligible for the volunteer firefighter's amount and claims a $6,000 credit here. So remember, in this case, he has the option because of the box 87. He could have a $1,000 exempt income or claim this $6,000 credit. In this case, the $6,000 credit is more beneficial. So remember, if you're eligible for both, you have to choose which one you're going to do. And it's entirely possible for someone to only be eligible for one of the two. But in this case, he's eligible. So the $1,000 in income, so that $1,000 in income in box 87 is treated as taxable and is included up on line 10100 because he is claiming the $6,000 credit. All clear? So what remains unclear, or what are you wondering what we do next? The 6,000, right? So the 6,000 is the emergency volunteer credit, right? The volunteer firefighters amount. Your line 30800 and 31200 are different. We will look at those in a moment. Okay, we'll look at Schedule 8 in a moment. Okay. Now, he's also eligible for the Canada employment amount because his employment income is more than $1,433. He claims $1,433. So this gives us an extra $10,765.40 in tax credits. So his tax credit total then is $26,470.40. Okay. So this means, again, you can think of it as his first $26,470.40 in income he doesn't have to pay taxes on. So to reflect that, we take 15% of the $26,470.40. 15% of that is $3970.56. So $3970.56 in tax will be canceled out. So why does the $1,000 become $6,000? It doesn't become $6,000. You claim. Let me finish. So hold on to this thought. Let me show you what happens next mechanically, and then I'll backtrack. So the tax credits here, $3970.56, are deducted from the tax we calculated earlier. So we take the $8581.25, we deduct $3970.56. So his net tax, his basic federal tax, $4610.69. All right. All right, and what's on line 114? Oh, this one here? That's medical expenses. If he had medical expenses, there would be a calculate. They would have line 114 here, line 115 here subtracted from them, but we haven't talked about that, so don't worry about it. Right. The main thing is the result at this point is zero because he has zero medical expenses. But we'll get into that in a future session. Don't worry. It's just populating because this figure here uses net income as a base. so that automatically carries. All right, so remember with the emergency volunteer credit then, so the first thing is the $1,000 in box 87, this is an honorarium he receives for being a volunteer firefighter. The honorarium could be less than $1,000, but it has a maximum of $1,000. So this is why we throw around the $1,000 figure. The amount doesn't really matter because whatever the amount is, it is not included in your employment income unless you choose to include it in your employment income. So notice there's no box 14 here, so it's not by default included in any box 14. You can choose to include it in your employment income if you are claiming the emergency volunteer credit. If you claim the emergency volunteer credit, you must include this in your income. If you don't include it in your income, you cannot claim the emergency volunteer credit, whether for being an emergency firefighter or a volunteer firefighter or a search and rescue volunteer. Okay, so yeah, so the amount is kind of a red herring. It's not. It could be less than 1,000. It's just maximum of 1,000. So we put in 1,000, just because that's the maximum you could be looking at. If it's less than 1,000, then it's even less of it. They're even less comparable, right? Like if it's only $100, well, obviously the benefit from a $6,000 tax credit is much higher. So we don't include the $1,000 in the EI calculation. Well, notice here, it's not subject to that. It's an honorarium because it is not considered to be EI insurable earnings on the T4 is the basic answer, right? So this isn't included in the CPP or the EI calculation as a result. It's just taxable, not pensionable or thing. And how do we know that the emergency credit is 6,000? Well, no. Hang on, Valerie. Hold that thought, Valerie. It's 6,000 because it's specified. It's actually specified on the T1. So if we look at the T1, or it should be. Get back here. No, that's Richard. Enrico, there we go. So the emergency volunteer firefighters amount. So notice here it is specified with Canada employment amount. Here the amount's not specified. So we know that it is 6,000 for 2024, but maybe you're not sure, right? Maybe you're doing this manually. You've forgotten what I've taught you, and you're like, I need to look this up. For any line where you're not sure what it should be, and you are not using software, say, or anything like that, you can double check it in the textbook, and obviously you can look in the textbook right now. I don't need to show you how to do that, but you can also. There's another way to look it up as well. If you look up on the Canada Revenue Agency's website, for any given year, they have what's called a tax package for that year. And part of it is for information, and part of it is the actual forms. So if you click on Federal Income Tax Benefit Information for 2024, got all kinds of information here, and it helps you to figure out things where you're having trouble. So. And if you dive into this information, it has specific information about specific lines. So for this one, the person doesn't have anything unusual going on. But it's got information about what changes is, when you have to file, who has to file a return, and down near the bottom, it has information on all the lines, line by line. So for the volunteer firefighters amount, it tells you you can claim 6,000, right? So anything where you have trouble finding the information, maybe you can't find it in the textbook easily, remember, there's another way to look this up. All right, now, all right, but yes, I also told you in the last class it was 6,000, but that's right. Can you download the completed demo filings? I'm sorry, our policy doesn't allow that for a few different reasons, mainly to do with corporate privacy regulations. It's kind of a long conversation I don't want to get into and eat up time on the recording. However, if you've completed the filings, what you can do is say, hey, this is my end result, and then send it to me. Hang in there, Humaira. Hang in there. We'll get to that. Let's have a look at the Schedule 8. So, but generally, if you want to check your results against mine, an easy way to do it is say, okay, Brian, my net income amount was this, and my taxable income amount was this, and my tax credits amount was this, right? Just give me a few key lines, and I can say, oh, yes, this is right, this is right, this is right. Oh, you must have gone off track here somewhere, and we can quickly figure that out without me needing to send you the actual forms, which would be where the policy issue comes in. So, all right, now but that said, we haven't actually done enough in the course yet for you to finish these returns, so don't worry too much about them at this point. After we finish Chapter 6, you can go through and finish any of these returns to get a final number for income tax, and then it's very easy to check. Yes, your tax refund or balance owing matches exactly. You don't need to worry. Or if it doesn't match, we can say, aha, then we can backtrack and figure out what the issue is. Now for line 30800, let's have a look at the Schedule 8 again. So for Schedule 8, now here we can see this person is subject to CPP for the entire year. All right, so that's no problem. Schedule 8 is a little hard to read. The modern version is. Remember 10 years ago, there was no such thing as an enhanced contribution. There was no such thing as CPP2. It didn't used to be so tricky. They've had to really tinker with the form to make everything work out. So it can be a little hard to just quick read this in a hurry, but let me walk you through it. So in the top here, we have the total CPP earnings from box 26 of all T4 slips, right? So 58,480. So again, that $1,000 in box 87 is not included. So 3,500 of that is exempt. So remember, the exemption is per year, per person, not per job. So the earnings that are subject to contributions, 54,980. Now we're going to first look at the actual base and additional contributions on CPP earnings. So we take the total from the box 16s, and then what's happening here is we're splitting it apart. Remember, this total is 5.95% of X, but 1% is a deduction, and 4.95% is the tax credit. So this is the reverse calculation of that. So 2383.54 is the 4.95% portion, and the remainder is the 1% portion. Right? The required contributions, as we can see, are actually higher. So what it should be is 54,980, right? Remember, that's this figure from line 7. 4.95% of that is 2721.51. 1% of 54,980 should be 549.80. The total contributions should be $32,71.31. As you can see, the actual contributions are less than that. This is an underpayment situation, right? And the difference between them is $337.97. So in an underpayment situation, you can only claim as a deduction and as a credit what was actually paid. So in this case, $41.52 is the actual deduction, $23.83.54 is the actual line 308.00. The $337.97 doesn't need to be paid back, and the calculations are a little right. So that's the actual base. That's the deficit in the base contributions. This is the deficit in the enhanced contributions. So the actual shortage is $406.25 for both of them together. Okay. Now, what has caused this? I think would probably be your next question. Why is it an underpayment? I think there's a reasonable explanation for this. But what do you think might explain an underpayment in this situation? The employee doesn't really touch a lot of the payroll, Valerie. It's pretty much calculated by payroll. I think, well, yeah, it's going to be on the employer end of things. And I think you're getting warmer. Yeka, you're getting warmer. It has to do with the two jobs. It has to do with the two jobs like this. Remember that $3,500 exemption? It's per year. Exactly, Christina, exactly. Probably both employers took the $3,500 exemption into account, but it can only apply once. So if we look at the difference up here between, so 54,980, if you were to reduce that by another 3,500, you would really start to get a lot closer here. So I think that's the most likely explanation, right? And it's not deducted; they just exempt a certain amount. Now we want to be careful using words like deduction because they have a specific meaning, so they can be unintentionally misleading. Good. All right. So I think that covers most of it. If there's anything we missed, of course, or anything like that, Microsoft, get out of my way. All right. So, okay. So, a couple additional questions on this one. What if he only volunteered 180 hours in 2024? Well, in this case, he wouldn't qualify for the volunteer firefighter tax credit. So in this case, he would then want to claim the income as exempt. So he would not include box 87 in box 10100. He would just put the $1,000 in line 10150. Exactly, Val. Right. So in that case, he's not using it at all. He's just entering it on 10150. So the CRA knows what's going on. Now, if he had not received the box 87 amount, so he didn't receive the honorarium, would he still be able to claim the volunteer firefighter's amount? Well, I think you can give me that answer. Exactly, right? So the honorarium and the volunteer firefighter's amount are completely independent. It's entirely possible to have one and not the other. Having one is not what makes you eligible for the other, right? So that's the key thing. All right. So if he uses the honorarium, does it get added to the income? Well, I mean, you receive the honorarium either way. It's only included in income if he is claiming the $6,000 credit. Right? either, it's either way he has received the money, but it's only considered income if he's claiming the $6,000 credit, which, again, most of the time is going to be much more beneficial. I can just barely imagine a theoretical situation where it would be less beneficial, but, especially since the volunteer emergency volunteer credits used to be only $3,000 rather than $6,000. But yeah, now I think, almost any situation you could think of, it would be more beneficial to claim the credit. Muhammad is asking, if he has an honorarium but not the certificate, can he can't, so if he has the honorarium but not the certificate showing the hours, he cannot claim the tax credit, right? So in that case, the honorarium doesn't have to be included in income, but he does have to put it on line 10150. Remember that volunteer fire tax credit is based on a minimum of 200 hours. Right. Okay, so let's keep that. If any other question, if you got any more questions, just drop them in the chat. But we're going to move along a little bit. So let me I'll bring that up in a moment. So here's what we're going to be covering today. So today we are going to be reviewing self-test number 1. Now, as you will see, self-test number 1 is relatively straightforward, so you could even answer on the fly if you haven't had a chance to. Then we're going to be talking more about tax credits, specifically personal amounts, and more about some additional non-refundable tax credits. We're going to start to move past employment tax credits, and we're going to start talking about some refundable tax credits. So by the end of today, you'll be able to basically work through Part B of the tax return fairly well. So you're going to be able to identify the personal amounts, how to claim them on the tax return. You're going to be familiar with the rules about the home buyer's amount and how to calculate a taxpayer's total non-refundable tax credits. We've been talking about some of this already, but if there's any more questions, those can come up. We are also going to be talking about certain refundable tax credits which don't appear in the tax return. So who is eligible for the GST credit and how to calculate the amount which can be claimed. In British Columbia, we only have GST. There is no HST, which is a very long discussion, which if you're really interested, I can get into. But suffice to say, some provinces only have GST rather than an HST. We're also going to talk about the claim of the Canada Child Benefit, which is a relatively new refundable credit, which came in the mid-2010s, and the Canada Carbon Rate, who can claim it and how it is claimed. We in British Columbia cannot claim it, so we're not going to need to spend so much time on that one. All right, so that said, let me go back to a full screen for the yeah, let's slideshow full screen. Click. Yes, I'm running this using the Microsoft Office online suite, so occasionally we'll get a little bit of lag. All right, so I'm going to pull up our poll questions over here, and you can play along at home. So we're going to review the answers for the self-test here. So question number 1. Jeff Johnson received the following amounts during the year. Box 14 of the T4, $5,800. Tips, not on the T4, of $400. And he also received an inheritance of $12,000. Wait for it. What is his total income on line 15000? So we're going to open up the poll for everybody, and the response time is 1 minute. So is his total income A, $5,800, B, $6,200, C, $17,800, or D, $18,200? Let's see what you think. Okay, I can see people are coalescing around a single answer. A few people haven't responded yet. And as always, that's perfectly fine. At any given moment, I assume there's usually a couple people who've stepped away from the keyboard to get a glass of water or something, so that's perfectly fine. But in case you're thinking about it, though, you have 18 seconds left. All right, and now WebEx will just wait a few seconds to send out the answer to you. And normally it does that when somebody has the window open but hasn't made a selection. All right, so we'll print our old poll results here. Okay, so the answer then for this one is B, and that is composed of the income from the T4 and the tips not included on the T4. So inheritances in Canada are not taxable in the hands of the recipient. They are not considered income in the hands of the recipient. The estate itself files a tax return, and the estate pays any tax, and what is paid to the recipients is not taxable. Tips are considered taxable income, regardless of whether they are, well, remember, so tips are included in total income, right? So they are considered to be potentially taxable. So they are added as income in step 2 of the tax returns. They're included in total income. The taxable income number may be less than that because of other deductions. All right. Question number 2. All right, let's pull that up here. Question number 2. There we go. So Sarah is 20 years old and lives in Ontario. Her gross employment income is $35,000, all of which is insurable and pensionable. What is Sarah's total required CPP contribution? All right. Hold that thought, Mohammed. All right. So, is her required CPP contribution $1,559.25, $1,732.50, $1,874.25, or $2,082.50? All right, so set the timer and open the old poll. Now, this one is going to involve a little math. We never said there would be no math in this course. And to answer your question, Mohammed, if someone comes in and says they have $500 in tips, it is not our responsibility to verify it, but we do advise them that it is their responsibility to maintain records of the tips. So if someone comes in and says, yep, my tips are this amount, I'm like, okay, you've kept records of it. And if they say yes, then it's between them and the CRA if they have not kept those records. We have a line of legalese in our documents which says this return has been prepared without audit. So there are certain cases where, as long as we are reasonably satisfied the taxpayer or their business is keeping records, then we're not going to go audit them when we do their taxes. Not unless they pay us to. And you can assume that would be the same at any reputable tax preparation firm. All right, so we'll close out the poll in about 1 second. There we go, and I'll push that out to you. Okay, so for this one, the answer is C. And we'll show you how we arrived at that. So we take the $35,000 and we deduct the $3,500 exemption. That leaves $31,500. So the total contribution is going to be 5.95% of that, $1,874.25. Valerie has a question about tips. What do you do if someone says they didn't keep records and don't know the amount of tips? Well, what I do is advise them of the situation and usually guide them through reasonable ways to make an estimate of the tips. And then give them a lecture about the need to keep records, right? Basically, my suggestion is, well, you have to file your taxes. I suggest you start, going forward, try to keep better records. Every tax professional's approach is going to be a little bit different. I try to work with the client, and if the client wants to submit something which is obviously inaccurate or unreasonable, then I have the option to refuse to submit the tax return. Professionally, my obligation is to complete as fair and accurate a return as possible, and if someone is clearly misrepresenting themselves, then I have the option to refuse service. But usually I try to work with the client, say, okay, let's be real here. Mohammed is asking, is the CPP calculation the same in all provinces? A good question. Unlike EI, CPP is calculated the same in all provinces. The Quebec pension plan uses the same calculation. But we're not going to get into more details about Quebec in this course. All right. All right, question number 3. Let me pull up the poll question here while I'm talking. So question number 3, Gabriel has shares in a U.S. company that cost 105,000 Canadian when he purchased them several years ago, and last year they were worth $85,000 Canadian. Should he file Form P1135? All right, let me just set the time limit here. And open the poll. It's a simple yes, no question. But I'm going to make a note, because for next year, I think this maybe I would like to see this question phrased a little bit. We are about 20 seconds left, so some people are still thinking about it or having a long glass of water, as case may be. All right, and WebEx is going to wait 20 seconds for any windows that are open. There we go, and now I can forward it. Okay, so a clear preference for one answer over the other. Let me push that out to you and show you the correct answer. The correct answer here is yes, because the cost of the foreign property is more than $100,000 Canadian. So remember, with the T1135, what matters is the initial cost of the property, the purchase price of the property or properties. Remember, for things like money in a bank, that's a simple matter of how much is in the bank. But with land or property which hasn't been sold yet, the market value, what they were worth, this is just theoretical. Unless he sells it, this number doesn't mean anything. The constant over time is going to be the cost value of the shares, and those are over 105,000, over 100,000. So that's what's used and what is considered when considering whether someone has to file the T1135 or not. And so for me, the should here is a little weak. It's more a question of, does he have to file T1135? You either do or you don't. All right, question number 4. Yes, Gary. Gary is a kindergarten teacher, purchased various board games to be used in class for the purpose of the eligible educator school supply tax credit. How is this claimed? So, simple question here. Is it claimed as A, is it A, consumable supplies that are eligible supply expenses, prescribed durable goods that are eligible supply expenses, or C, they cannot be claimed? Sorry, I'm having a little trouble pulling up the poll question behind the scenes there due to WebEx has a restriction on the number of polls you can have going on the front of your tab, basically. All right, but let me open this up for you. A, B, or C, in 1 minute. So if you have a test like question like this on our final exam, of course, remember you can check with given expenses in the textbook to see whether they are eligible for the credit or not. In this case, the question is, how do we treat board games? All right, we've got about 30 seconds left. Good, good. Ten seconds or so. Okay, people are concentrating around a single answer. That's good. I always like it when most of the class is getting the correct answer. All right, so in this case, I'll push that out to you. So in this case, the correct answer, most of you got this correct. The correct answer is B, as prescribed durable goods that are eligible supply expenses. Now, the distinction, if anyone's still having trouble with it, because this might seem academic because you're treating them the same, but it's important because for other purposes in tax, durable goods are treated more like assets, and they are not combined with consumable supplies. And again, consumable supplies, anyone who missed this last time, anyone listening online, if you missed this previously, consumable supplies in tax terms are things which are used up during the year. So things like bottles of paint, bottles of glue, a box of pencils. You buy a box of erasers, and at the end of the year, you have no more erasers. It's been consumed. Though that's what supplies mean in tax purposes. Durable goods are not normally combined with consumable goods for purposes of expenses for things like, say, business or employment expenses. So this tax credit specifically allows you to treat certain durable goods, like in this case, board games, as a consumable supply. For other purposes, if you were, say, running a daycare and claiming business expenses, your board games would go in a different category and be claimed in a different way. All right. So even though we're not going to be talking about business expenses or employment expenses in the class, I want you to understand in this level of the course, I do want you guys to understand the reason for this distinction. All right. Humaira has a question. If a teacher has all the receipts of purchased various games, can they claim more than $250? So remember, the $250 is the credit. They can claim up to $1,000 in games, right? The $250 is how much their tax is reduced by. Now, one of the chapter review problems, we might get to it today, actually. So in the case where a teacher wants to spend more than $1,000 in expenses, there's a specific tax tip we can give them. So I will give that to you when we get to the chapter review problem, because I think we haven't come to it yet. But essentially, you are limited to $1,000 in expenses in any one calendar year. All right, question 5. This is familiar. I think you should all be pretty good with this one after our discussion. So let me pull up the poll question over here, set the timer, and so Carol is a search and rescue volunteer. She receives a T4 slip reporting $1,000 in box 87 and $500 in box 14. Her certificate states that she volunteered 250 eligible hours in 1 year. So, assuming she is single with her only other income from a second T4 for $50,000, how should she treat her search and rescue income on her tax return? Should she A, include $500 in income and claim the search and rescue volunteer amount? B, include $1,500 in income and claim the search and rescue volunteer amount? Or C, include 0 in income and claim the search and rescue volunteer amount? All right, I think you're all ready to answer this one. So, okay, WebEx is just gathering things. The correct answer is B. This person, Carol, would include $1,500 in income and claim the search and rescue volunteer amount. All right, and this will be entered on the return as follows: $51,500 on line 10100, and line 10105 would be 0. And then the tax credit shows up on line 31240 as $6,000. All right, and here we go. So the tricky part in this question, the really tricky part, is the 500 in box 14 always has to be included. So we obviously know it's not going to be A. And for C, including 0 in income, well, that isn't going to work because we have to include the 500. So to claim the search and rescue volunteer amount, so in other words, the only options, real options here, would be to include the 500 and not claim the search and rescue volunteer amount, or include $1,500 in income and claim the search and rescue volunteer amount. Right, Muhammad has a question. If it's mistakenly treated as exempted as taxable income, can you change it after submitting the file? Yes, we will talk about that later in the course. When you have certain mistakes, normally you can make what's called an adjustment to the return to fix the mistake. And in general, it is better to fix the mistake for the CRA rather than wait for them to fix it for you. Because if you wait for them to fix it, they might conclude that you are hiding it. Okay. All right, let's yeah, okay, give me a second, because we've taken a little more time than I thought. So why are we adding the 1,000 to income here and not in problem 3B? but we did add it to income in the previous problem. In 3-2, we did include it. Yeah, no worries, no worries. Yeah, if we hadn't included it, then that would be confusing. All right, just give me 1 second. I'm going to move on. We spent a little more time in discussion in this half. Hold that thought, Christina. I just need to move some slides around behind the scenes. But that is a good question, Christina, as usual. Just moving some slides around because I want to move our break up a little bit. Yes, I think it should be fine. There we go. Hang on. There we go. All right. There we go. There we go. We're not breaking just yet. Don't get excited. Okay, but because we're about to get in a fairly big chunk, and I don't want to have to go through an extra 50 minutes of talking before we get to the break, and I also don't want to break in the middle of it. All right. Let's get our chat window back up here. There we go. So, Christina, in this particular T4, it means that he had $500. Interpreting what we looked at in this particular T4, this firefighter would have received $1,500 total, but only $1,000 of that can be treated as an honorarium. Remember, the maximum for any honorarium for this purpose is $1,000. So this firefighter got paid $1,500. So this means that anything over $1,000 is treated as regular employment income. That would be how I would interpret that. Right. So for this particular T4, their actual income is the 1,000 in box 87 and the 500 in box 14. When you are looking up box numbers on a T4, they will normally specify whether the box is included in box 14 or not. Many boxes are included in box 14, but box 87 is one of the exceptions where they're not. We're going to run into one or two more of them in this level, in this course as we go through, and I'll point them out as we go. All right, so, but before we go on, click, there we go. So I would like to, remember we've been talking about the mechanics of the tax return. So I want to review a little bit with you, just to help demystify the whole thing. All right, so we've been saying that we don't expect you to memorize line numbers. That said, we're using a lot of line numbers, so I would like you to list some line numbers that we've encountered so far in the return. And you can pull up the 8-page tax return and have a look at it if you like. Again, we don't expect you to memorize line numbers, but give me some line numbers, some deductions, income amounts, credits of various sorts that we've seen so far in the course. Because remember I told you something about these